Hey guys, Josh here from the Sunshine Tribe. I wanted to prepare this little lesson today. It's all about reporting, and the reason I'm doing it today is I've had a lot of questions both from students in my Scale and Sell coaching program recently, and also from people just in my community about reporting, about how I reported. I've showed some examples recently, and people wanted to know more about those. People wanted to get right into the specifics of how, when, what I looked at, and how I used reporting in my business to make business decisions. So I thought I'd record this, and I thought all of you in the community could benefit from this as well. So if you're in my Scale and Sell coaching program, you're going to get obviously the benefit of all of the resources, the samples, the templates and things like that I talk about in the lesson. But if you're just a part of my community, in my Sunshine Tribe community, you're going to get a lot out of it. You're going to get a really good look at exactly how I reported in my business and how I use those reports to make really, really smart business decisions. So I'm going to share my screen in a minute, and you can jump over behind me. We'll have a look at exactly the way I looked in my business. Now, the stuff that I'm going to talk about, it didn't come naturally to me at all. I'm definitely not a numbers guy, and it took me quite a while of encouragement from my bookkeeper, from my accountant, and I had to persist, and I didn't find the reports valuable in the early days, and so it took a lot of work and communication with my tax advisor, with my bookkeeper, to have them present things in a way that made sense to me. And once I started persisting, once I started reviewing my numbers regularly, once I started reading the reports and I guess improving the reporting, and then really drilling down and understanding the numbers better, I would say it's the single most valuable thing that I did in business. And it just allowed me to obviously, as I say, to make really smart business decisions. But once we got the process dialed in, and once we started reviewing our numbers regularly, I mean like once a month, once we started making projections, once we started budgeting, and once we started comparing our actual results to the budget that we'd set for our income, for our costs of sale, for our operating expenses, then the improvements across my business were just dramatic. So if you don't look at your numbers at all, or don't look at them regularly, you're going to find a massive amount of value in this short lesson. If you do, and if you are using reporting software or accounting software, and you are looking at your numbers on a regular basis, hopefully you'll also find perhaps an edge, a few new ways of doing things, some improvements that you can implement into your business from the way that I did it in my business. So why don't we go and take a look now? Okay, guys, so what we're looking at here is a financial report for the financial year ending June 30. So I actually wanted to show you a report in Excel, but I can't do that, unfortunately, because we used Xero in my business, and our Xero file was passed over to the new owners of the business when we sold our business. So I'm just going to try and explain it to you as best I can. So the first thing you need to do is start with a profit and loss report. So let's just look at this column here, 2017. So let's assume that this is our profit and loss, and then it's as close to a profit and loss statement as you can get. So the first thing we've got is our trading income. Now we've got our corporate event sales, MPT corporate events, just coded MCE. We've got MPT Melbourne private tours, and we've got MPT worldwide journeys. Now we didn't do any. The reason there's no income there is because MPT Worldwide Journeys was a couple of really high-end experiential outbound culinary adventures that we ran, and they were very, very pricey. It was about $13,000 per person. We ran groups of like 12 to 15 to southern Spain with some celebrity chefs, and they're amazing. But we made the decision in 2017 that we weren't going to run any of those trips. So that's why there's no trading income there for Worldwide Journeys. So total trading income was just over 2.1 million. And next thing we've got here are our cost of goods sold. So what this would be in a profit and loss, as I'll show you in another example, is cost of sale. The costs directly associated
with the service, the experience that you run. So here's our cost of sales. So additional cost of things, everything that wasn't kind of categorized. Aviation costs, we did a lot of luxury helicopters, a lot of private flights with a lot of our more experiential, like high-end premium experiences. So that was quite a chunky expense there. Things like fuel, for our private tours, meals, tasting, accommodation, vehicle and equipment hire, all those kind of things. So that there is the direct cost of sale, making our gross profit about 1.4 million. Okay, so down here we've got other expenses. Let's call these business operating expenses. We've got all the ones that kind of don't change a lot, depending, in your business from year to year. So, advertising, bookkeeping, business development, cleaning, computer and IT, depreciation would be fairly similar in many businesses. Motor vehicle parking and tolls, motor vehicle registration and insurance. Now, some of these you might argue would and should be found under the cost of sale, and you're absolutely right. So things like motor vehicle parking and tolls, I would, to be honest, actually put up there under cost of sale, to the cost associated with running your tours. So we're always improving this, and it's a constant matter of sitting down with your accountant and improving your financials. So motor vehicle repair and maintenance, another one where a lot of those expenses. Some of them could be a proportion attributed to the cost of sale. Obviously, as you're running more tours, there's going to be more maintenance. So we're still looking at this 2017 column, and we've got all of those business operating expenses there. Again here, subcontractors, a big chunk of money there for subcontractors. And as I mentioned, I would really, and I probably did have the discussion with them, put those up into the category of cost of sale, because the majority of our subcontractor costs were for tours that we were running. So a little bit of shuffling around with your expenses. It's going to be a constant process of improvement with your tax advisor. But that's one thing that I probably would have changed. I would change if I was still running that business. Superannuation, all these kind of things that related to the operating of the business. Wages and salaries, of course, all our part-time and full-time staff. So that's that. And then down here, we've got a net profit. So that would be the net profit. So income less the cost of sale, less the business operating expenses, would have us arrive at this net profit. 771,000 in the year of 2017 was the net profit of my business. Okay, so that's the starting point. Now, what we would do is take that profit and loss, and we would make, so let's say that the financial year ended on June 30. Well, in the first week of July, we would sit down and set a budget for the following year. So for the financial year running July 1, 2017 to June 30, 2018. And we would create a budget or a forecast that looks kind of like this. So this is the budget that we created for July 17 to June 2018. And we looked at the individual numbers that we did in the last financial year, and we made some predictions on how we would perform in this coming financial year. So what your projection, what your budget is completely dependent on the circumstances that are going on in your business. So let's say, for example, you have invested heavily in marketing or running or advertising, or there's been some really big things. You've done a lot of trade shows, you've invested and you've spent a lot of money to grow your business. Well, you might be kind of shooting for the stars in the budget you set for the following year. You might think that you're going to grow by let's say 30, 40%, 50%, whatever it is. So you would actually put a monthly budget for every month of the next financial year, all the way through to the end of the year. So that's what we did. Now, this budget, I can tell you, we took a look at our numbers for the same period the previous year. and we decided on about a 20% increase right across the board. So these numbers, these revenue numbers that you're seeing, and these total, well, income numbers and total income numbers represent about a 20% increase right across the year based on what we did in the previous financial year, which was July 1, 16 to June 30, 2017. So we just increased everything by 20%, 20%, 20%, 20%, 20%, which is a simple way to do it. It's ambitious, certainly achievable, and we didn't put a massive amount of thought and detail into our budget that we set for the next financial year. Our focus was to improve the systems in our business for that year. We didn't invest heavily in anything that was going to significantly grow our business. So therefore, we came out with a total budget of around $455,000 for corporate event sales and $2.2 million for private tour sales, giving us a budget of $2.655 million is what we were looking at. And then what we did is this: we looked at our cost of sales, additional costs, which are all the things that didn't have, lots of bits and pieces that didn't have a specific category. So aviation, entry and admin, experiences and hamper costs, so gifts and picnic catering for our corporate events, fuel, meals, subcontractors. So what we did is we were, again, fairly conservative, and we just looked at what we had spent in these categories in the previous financial year, and we just increased them by 20%. Okay, we just anticipated that if revenue is going to increase, then our cost of sale was going to increase. You could go about it in a different way. You could go about it in more detail. So if you chose, let's say, for example, you plan to do more of your high-ticket luxury private helicopters and things like that. Well, you could be more specific here about your budget, like actually give it more attention to detail and put some real numbers in there based on what you thought was going to happen in your business. What if you were going to go on a big drive to reach out to all of your suppliers and to get some sharper rates, and you're investing a lot of time and energy in reducing the cost of sale in your business? Well, you might say, we're going to have some wins there, so we're going to just budget a 10% increase in entry and admin. So 20% increase in revenue, 10% increase in admin and entry, because we think we're going to save some costs here. You know what I mean? So it's very, very individual. What about your subcontractors? Were their rates of pay, had they received a pay rise last year, and therefore they weren't expecting a pay rise for another 12 months? Therefore, your subcontractor expenses wouldn't change. Or had they been working on the same rates for like 3 or 4 years and they were expecting a 20% increase? You know what I mean? So it's very, very much individual for your business. So you could do it in a fast way, which is just to sort of extrapolate out the increases that you've budgeted here over these cost of sale, or you could be, you could go item by item and actually give it some really real thought. Same with these. Again, you probably with your operating expenses, you need to look at each one, okay, and think about what's happening in your business, what you can expect over the next 12 months. Are you going to be spending more on advertising? Are you going to be negotiating better bank fees? Is your bookkeeper going to remain with the current arrangement, or is their workload going to increase? So be very, very specific. Would there be any increase in computer and IT? No. So that would just be the same. Would there be any additional in freight or courier? You know what I mean? So you take a look at each one and just ask yourself, what's going to happen in this category expense? Is it going to stay the same? Are we expecting an increase? And then you can put those numbers in based on what you did in the previous year. And let's say you've got a lump sum, like, in your profit and loss for the previous financial year, you've just got one big chunk of parking and tolls, which is 38,000, let's say, throwing a number out there, and you are expecting, let's say, no change. Let's say you're not expecting any change. So you think it'll be 38,000. Well, in these categories here, you just be putting in dividing 38,000 by 12, which is, I don't have a calculator on me, and just punching that number into each month here, okay? So that's what you would do the whole way down, and you would come up with a budget for the next financial year. So I hope you're following this. So then what you would do is this. Let's say, for example, you popped in here and you inserted a column and you went boom, just like that. Okay, so here we've got budget. Here we've got actual. I used to do it in the latter stages of my business at the end of every month. In the earlier stages, I did it every quarter, every 3 months, because we just had a lot going on. So we would review this every 3 months. So you've got budget and actual for July. You would do the same for August, September, October, November, December, January. So you got your budget there, you got your actual. So let's say, for example, once July is over and on the 7th of August, you sit down in a meeting, you ask your bookkeeper to prepare a report, or even better still, ask your bookkeeper to populate this column, okay? So they will go down and add in every expense from this column once they've reconciled your books. So, and we learned that corporate event sales were 27,000. Awesome. Melbourne private tour sales were 144,000, okay? None, 0,000. And you go all the way down. I haven't got the formula in there, so it's not going to spit it out. And then you look at additional costs, whatever they were. I can't even tell you what actually went into that category. It was a few years back. Aviation costs were, oh, you know what? They blew out. So aviation costs we discovered were, let's say, 22,000. Okay. Entry and admission fees were 7,000. Okay. And what else have we got? Fuel was 4,000. Okay. So your bookkeeper is going to put these figures in there. So you sit down as a team with your operations manager, yourself, or even if it's just you and your husband and wife, and you look at every line. You report. You do this. We did it every 3 months in the early days. Maybe you might do the same. But as the business grew, we had more bandwidth and resources. We would do it every month. At the end of every month, it's 4 or 5 days into the next month. So I just want to give you an example of how it would look. And this, I'm just using 1 or 2 examples from this column. But you would literally go line by line. Okay, guys. So we budgeted 25K. We did 27. Fantastic. That was good. Anyone got any ideas? What went well? What can we attribute that to? Oh, well, we got that great new customer that we ran that big team building event. Awesome. How did we get them? We should do more of those. Okay, so there was a discussion around it. Next, we budgeted 150K and we did 144. Yeah, look, not too bad. It was an ambitious budget. So we've beaten last year's numbers, but we didn't quite meet our budget. What has anyone got to say about it? And we would have a quick discussion about that point. What are we looking for? We're looking for improvement. We're looking to celebrate wins, talk about how to do more of them. We're looking to critique losses and talk about what we could do to improve. So we would do that line by line. And look, we had no worldwide journey sales, no government grants. Some of these categories are just they're accountant talk, so I don't even know what this even means. I've got to say, as I mentioned, I'm not the greatest numbers guy on the planet. So some of the categories and some of the things you look in my reports and you say, what the hell's that? And I'll say, yeah, good question. What the hell's that? I didn't look at every single element and aspect of them, just the important stuff that I can make smart decisions about. So then we'll go over here. Additional costs were down. We might look a bit further as to what specifically they were and how we would reduce those costs. Could we reduce more? Aviation, well, that jumped right up. And why? Well, there could be a reason for it. Well, let's say we had one new customer who did 2 extra high ticket experiences. We saw that reflected here in private tour sales. Costs jumped up there. So we're like, well, hold on, why is that? We've done another really good high ticket sale, but it's not reflected here. And we might say, well, the reason for that is we're working with an agent who pays 60 days post tour. Okay, so we'll see that reflected, in another month or 2. You know what I mean? So we'd have a discussion about it. And entry and admission fees. Well, we hammered away at our suppliers to get better rates. And yeah, we've had a reduction there, but that's kind of on a par with the reduction we've had in private tour sales. So to be honest, we haven't seen any big wins there. What can we do more of? Fuel. Wow, that's increased. Okay, what can we do? Where are we filling up? On what days are we filling up? Do we have a special account? Do we, so there's a discussion. Why is fuel increased, but private tour sales have decreased? Okay. So anyway, my point is that we were looking for business improvements, and we were looking for, to make smart business decisions based on the numbers that we would be looking at on a monthly basis. Now, as I say, in your business, you might do this on a quarterly basis. But the thing is, the conversations we were having around our numbers was so important. And the alternative is to have these conversations right down here in June 2018 to talk about the wash up of an entire year. And at that point, you're looking at things that could have gone pear-shaped all the way back in August 17, and you're not picking them up until June 18. Things that are working that you didn't capitalize on, things that weren't working and you didn't pick up and have cost you a bunch, expenses that blew out that you didn't even figure until 10 months down the line. So much can go wrong. So by reviewing your numbers regularly, you're going to pick things up right there and then, okay? You're going to figure out what's working and you're going to do more of it. You're going to figure out what's not working and do less of it and work out how to fix it. You're going to figure out when expenses are blowing out and you're going to address them. You're going to figure out when you're having some wins with your expenses, and you're going to do more of that stuff. And it's going to keep people motivated, and it's going to keep you making really, really smart business decisions right throughout the year. So the power of knowing your numbers is immeasurable, and I can't articulate to you enough how important it is. And you don't need to do all this stuff yourself. Okay, you don't need to know your way around a spreadsheet. You can quite simply just instruct someone or direct someone to do this stuff for you. So you can tell people, you can grab screenshots of this lesson as an example. You can send it over to a financial advisor, to a bookkeeper, and say, I want you to do something for me like this. Go away and do it, bring it back and show me how it works, and I'll tell you if it's something that I think is going to work for me. Okay, so I hope you found that really, really helpful. And if you're not looking at your numbers and reviewing your numbers, critiquing them on a regular basis, hopefully you can kind of implement a process like this into your business. And just to give you some perspective, when we did this once a month on, let's say, the 5th, inside the first 5 days of the month, it was a simple, once my bookkeeper was trained and knew exactly what we wanted to look at, it was such a simple process. We probably spent 30 minutes once a month on this meeting, and then people went away with a whole bunch of action steps. And those action steps was really dependent on who you're talking to, whether it was your operations manager or your general manager. But the people were given it could be to reach out to a supplier. It could be to explore a new opportunity or business, from a business development perspective. But a lot came out of those meetings, and it really gave us direction over the next month. And the same thing would you be able to achieve every quarter if it's every 3 months that you do this. But it didn't need to take a lot of time. And once our bookkeeper was trained to provide these reports and present them in a way that we wanted them presented, it was a really, really easy process. So just to be clear, when we've got this column, this actual column, you would be creating the same column after every month. So you'd have your budget and you would have your actual results. The budget would be set at the start of the year. The actual would be something that you would populate, you would punch, your bookkeeper would punch data into at the end of every month so you can review it. And this, for me, was the most powerful process, and gave me such control as a business owner over everything that was running through the business, and helped shape pretty much every decision that we made about growth and about scaling the business.